Today's guest is Binh Tran. Binh Tran is one of the two general partners of Ascent Vietnam Ventures, a seed stage venture capital firm investing in the Vietnam connected technology startups. Hi, Binh. Thank you so much for joining us today.
Thanks for having me.
Yeah. To start off, why don't you introduce a bit about yourself and your journey to founding Ascent Vietnam Ventures?
Yes, my name is Binh Tran. I'm one of two general partners for Ascent Vietnam Ventures. We are early stage investors, VC investors in Vietnam. Prior to running this firm, I was an entrepreneur. So I'm a founder turned investor. Had started four tech startups in the US. Three resulted in acquisitions. Prior to starting this fund, prior to starting investing, I had also completed 9 angel investments, 2 of which I was the very first investor. And of those 9, 1 became a unicorn and 2 are Series B stage investments. As a fund manager, my first fund, I've led 43 VC investments, of which those 43, 20 were in the first round of funding. And majority of those 20, I was the very first investor. So invest early. We invest in software and tech, and happy to be here.
Got you. I understand you work as a partner for the 500 startup.
Yes. So 500 Startups Vietnam was our first fund. That fund is a 2017 vintage fund. We had started deploying capital around 2016, and we had completed the phase of deployment as of just a few weeks ago. That fund was investing in companies connected to Vietnam. So we believe that Southeast Asia is the next growth story, next Asia growth story.
Yes.
And Vietnam plays a very critical role.
Yes.
It's a place where
Together
it's
with
very
Indonesia.
attractive.
Yeah.
Exactly. So we have markets here that have sufficient software engineers. It's an attractive place to live and a great place for founders, either locally or abroad internationally, to come here and start their companies addressing regional or global problems. And so fast forward to today, we have completed a total of 76 investments. That portfolio is continuing to develop. We have 1 unicorn in that portfolio and a handful of companies.
What is the name of that unicorn you invested?
That company is called Applyboard, and that's a Canadian company.
Okay.
What they do is they help international students, apply and get into international schools. Okay. And we became involved at the seed stage because Vietnam is a country within Southeast Asia that sends the most students overseas for education. And so the founder, we helped them and the team establish their first employee here. Now they're a market leader. They're a global market leader, but they're continuing to develop and scale.
Yes, I can understand. I mean, becoming the early stage investor or seed investor, which has in its own advantage and disadvantages compared to the mid stage or late stage investor, right? But can you tell us a little bit about your investment strategy as Ascend Vietnam Ventures in terms of market? I'm not sure whether you are fully focused on Vietnam, ticket size, the state, social impact, etc., etc.
Yeah, so I think in the venture class, so the venture class itself is a high risk, high return asset.
Yes.
Within that, early stage investing is the highest risk and the highest return. And so one does have to focus on certain areas of muscle memory and pattern matching and muscle building. And a lot of that has to do with deal sourcing, making sure you can get in front of the best deals and being able to select the winners, showing that you can move capital and deploy capital into the ones that are meeting the return profile that you're shooting for. Early stage investing is really a bit of art and science. I think there's aspects of early stage investing that does require a bit of an experience, right? You
Yep.
do over time have to figure out for yourself your style of investing, your particular view on particular sectors, and how you look at teams. You know, I do think that there's certain things that only through time and experience that one does develop.
Yes.
Early stage investment, you know, is critical to really just focus on the team. You know, the aspect that you have to think about are founders are still trying to figure out their customers, are still trying to figure out, you know, who they're building their solution for, what solution to build,
Yes.
how to price it. There's just a lot of learnings. And so the teams that I've been able to back and the ones that are successful tend to have a few common qualities within the founder. The number one is, I just think, you know, determination and grit. Just because you're
Yes.
wrong most of the time.
Yes. In
Yeah,
fact, every venture capitalist say that is the team and founders are most important. But how do you know that they are not going to give up? I mean, I can imagine the early stage venture, they will face tens or hundreds of the problems, small problem on the ground every day, right? They have many reasons to give up in on the way, right?
yeah, I think it's a mindset. It's a mindset of saying, hey, you know what? I have a belief in the world. I
Mhm.
have this idea that I think that's where the world is headed. I'm maybe unsure myself of it,
Mhm.
but I'm in an operational mode where I'm going to figure it out. You know, I'm going to, as quickly and efficiently as possible, try to figure out that path to that world. You know, I'm going to do a lot of experimentation. You know, I'm going to be wrong most of the time. I'm going to make these assumptions,
Yes.
and
Yes.
I'm going to say, hey, that's not the right customer. I'm not growing quickly enough in this area. That's not the right pricing, XYZ. And still have the confidence to go and say, hey, you know what? You should follow me. I know where this is headed, and be convincing enough so that people who might be even smarter than them say, hey, this is our leader. I want to follow you. I believe in what you're trying to say. And I feel the energy. And so a founder does have to have a little bit of that charisma, the salesmanship, to be able to paint a world that doesn't exist, you know, to paint a condition that they think is going to grow and you know, be prevalent through everyone's lives.
Yes.
So
So hearing from you is it is not something you can explain, answer in single sentence, right? It's more like a muscle memory. You have a lot of experience and you have some feeling and sense about the founders, and you can find the right uh, company to invest.
I mean, there are objective things you should be looking for. You know, I think historically you can look back at the decisions they've made throughout their career, the types of, you know, decisions, bold decisions that they've been able to make.
Sure, sure.
You know, I I think entrepreneurship is all about taking a lot of risk. You know, and sometimes those risks don't pay off. So how did they react? You know, so it's not just, you know, if a gut feeling. There should be some objective signals you're looking back past historical performance, their ability to get exceptional people to follow them, their ability to storytell. You know, are they able to tell a succinct and clear story to investors, partners, employees to get people on board?
Yes. Okay.
There's a lot, yeah.
So yeah, if I ask in a different way, who should contact you? I mean, to get raise the money, who should contact? What kind of a company? What kind of under what kind of a situation they should contact you?
I mean, we're VCs, so I think anyone who's ambitious, who believes they can win,
Mm-hmm.
you know, they believe they have the capability and drive to be able to be a market leader. They are deeply respectful of technology and engineering. They are disciplined in using data to help drive their decisions. I do think that there's, a little bit of craziness that they have to have as an entrepreneur. So it's not for everybody. I do think there's folks that are unreasonably confident, who, and they can come not just for capital, but just for advice. A lot of these entrepreneurs don't know the capital journey. They don't know the nuances of how to, de-risk from an investor's eyes, their journey. They don't know the nuances of the different types of investors. So I do think that, it's okay to not know these things, but, if you have a lot of conviction, a big idea, and it involves technology, you should come talk to us.
Invest in terms of ticket size. How do you usually, how much do you make investment?
We're seed investors. So we are writing checks that take up the majority of a seed round. And seed rounds here in Vietnam, you're looking at anywhere from $1 million to $4 million for the round size. And so we're probably looking at leading and taking up most of a seed round, allocating some space for strategic investors or folks who can potentially add value regionally or sector, from a sector perspective. So the technical answer is 500,000 to $2 million on initial checks.
Got it. Yeah. The other day I talked with, have a chat with another venture capitalist. He talked about the new trend of venture capital. He said that venture capital need to make an investment decision much faster than before. Do you agree that? I mean, are you seeing that trend in the market?
You see it with Tiger Global, and you're starting to see that with other firms like Coacher. Having the speed of conviction and really streamlining the deal execution can be an unfair advantage. You win deals, you get in the best deals. And so that can definitely be the strategy here. And for us, we want to, we're in the people business.
So how long does it take for you to make a decision, initial investment decision?
It's going to vary case by case. We've moved very quickly, within days, and sometimes it's taken us 6 weeks because of a condition precedent. But yeah, I think for us, the ideal case is that we're tracking you, we're making creating a relationship before you even start the company. You're someone who has an entrepreneurial DNA. You're already working at a company, or you're winding down your last. And we want to be that early partner where we can help you navigate kind of the other markets that we're seeing around the world, understand the trends that we're seeing. And, when that time does come where you're saying, hey, I'm raising outside capital, we're top of mind. So it's definitely a process that starts very early. And if we have that early relationship, then we can be very quick on making the deal.
It is much faster than I had thought, imagined. You said up to the 6 week or something like that. That's pretty fast. But I can imagine typical situation, first-time entrepreneur or serial entrepreneur, they develop the business model and then found the co-founder and then prepare the investment deck and then reach out to venture capital like you, and then they want to make a presentation, right? But do you have any specific advice to the entrepreneur who are looking to raise the money from the outside investor in terms of relationship with a venture capitalist? Is it still okay for them to reach out to you for the first time to make a pitch about their fundraising, or is there any other advice you want to share with other entrepreneurs?
I mean, we definitely want to, help founders, even if they're not, taking our check. Right? We believe that the ecosystem continues to grow. Founders who may not succeed in their first startup will potentially succeed in the next one. And we want to preserve those relationships and help those relationships. My advice for founders, going to fundraise, I think it's really important to treat fundraising as a dedicated activity. You should spend 100% of your time on that. It's not to do so is a disservice to the company and the team. And when you do so, you do some planning. I do think that there's storytelling elements that are extremely important. There's a fundraising strategy that you should plan out and design to generate momentum. There's the venture capital community is pretty small, and if there's a deal that someone is if there's a deal that someone's talking about, there's a lot of buzz. Everyone's going to want to hear about it. And typically one single term sheet can trigger multiple. And so if you time things right, if you can compress your fundraising schedule and craft momentum, perhaps have all your first meetings in the first few weeks, have all your second meetings in the next few weeks, so on and so forth. There's a lot of momentum that can be generated. But it all starts with great storytelling. You have to nail that story down, and address any elephants in the room. If there's a problem, if it's an industry that's highly regulated and people are worried about that, address it head on. These investors will be asking, they're sophisticated. If there's a concern about market size, address it on, even ask the question for them, right? And so when they do come across to find digesting anything to meet you, it's really just a positive ear of empathy on what you're trying to build.
Yeah, got you. Beside the investment, how do you support your portfolio company? Because every venture capital basically make investment, right? As a base case. Other than that, what kind of support do you plan to extend to your portfolio company?
Yeah, that's the goal of every venture capitalist, is to add value.
Right.
Money is cheap, but what kind of value can you add? And I'll stick to the early stage because there's different value add in different stages. And I particularly like the seed stage. That first 18 months of a company's formation is something I enjoy. I've never really worked for a very large company. I've always been an early stage person. And my experiences, I think, can add a lot of value. Our team's experiences can add a lot of value.
I agree.
I think in Southeast Asia, there's a lot of investors who are coming from investment banking or finance backgrounds, and in Silicon Valley, I think there's a
like me and my ex-colleague, like me and my ex-colleague, they have
there's
only
wrong
finance. I mean, yes, but different background add value to each other, complement each other, right? We can avoid the blind spot, right? Avoid the blind spot. Yeah.
Exactly. Here in Southeast Asia, if you ask any of the venture capitalists, if you're a founder, you say, hey, what's wrong with my engineering culture? How can I build a better engineering culture? That's a really tough question for a lot of folks who haven't done that before. And so within our team, we have that operational experience. We have run accelerators where we've really focused on growth and customer acquisition. And so, the value add we like to focus on, and especially important in the first 18 months of a company's formation. And the reason it's important is because if you build these things correctly, they live on for the company's lifetime, and they become foundations for that company to be differentiated within the market. And the areas I'm talking about are going to be around culture. How do you identify the right culture? First, the culture and values that the team currently has, and where that team needs to go within the market. And it's not just about identification, putting the values on the wall. It's about what are the tools and strategies and tactics to be able to go and curate that culture. How do you celebrate it? How do you make it visible from the outside? And that's extremely crucial, because in a competitive talent marketplace here, the companies that have great external cultures, recruiting brands are going to attract the most exceptional talent. And that leads to the kind of the second muscle or foundation that companies kind of form in the first 18 months is that how do I go acquire, develop this recruiting brand and create a candidate experience so that even when candidates come interview with me and they get rejected, they go tell their friends, wow, I still want to work for that company. What an amazing experience. I met this exceptional person. They had amazing processes, and it becomes a, advantage for companies to be able to go and say, hey, yeah, there's a mystique around the company where talent wants to flock to. The other pillar or foundation is, a lot of the organizational structure and management culture is formed within the first 18 months. And some founders, haven't had the experience to be able to go and say, okay, I've hired this person who's smarter than me in these different areas. How do I manage them? How do I lead them? Right. And in the tech world, you're talking about an organization with smaller people, say smaller organization. There's less people within the organization. They're using technology and data to be able to create levers to be able to create and leverage their time. And so you're looking at, these smaller teams with exceptional people, and a lot of like smart driven people, they need space, they need autonomy, but they also need alignment and clarity on what to work on. And so helping founders understand that, acquire the skills to manage that, and be able to create a management culture, which, these folks who have a lot of space and they're high performing, they get acknowledged and they feel like they have an impact in the organization. That's crucial in retaining that talent. And then finally, the first 18 months, companies are still figuring out who's their best customer, and they're still trying to figure out, where do I go find them? What's the most capital efficient way to go find them? So all these things around growth, there's a lot of thinking around frameworks on that, and I guess measurement to be able to experiment to get to that point where you're growing. So we can help in those four areas.
Continue the learning and growing process, right?
Yes. Yeah, and those four areas I think is pretty critical in seed companies. And if we can help these founders and teams establish a strong foundation in these four different areas, I do think that they have a strong chance in taking on any incumbent.
Yes, agree. So can you tell us a little bit about what is a new trend and the startup scene in the Vietnam in terms of potential? Can you explain a little bit about that?
Yeah, I can explain it within the context of the region. When it comes to venture capital, I think Vietnam by itself is very challenging from a scale standpoint. And so a lot of what we look at are solutions and teams that are starting in Vietnam, but the goal is to sell in other markets and expand across the region. Southeast Asia is at an inflection point. I think that the first mover strategy with capital is changing into one where there's a lot of competition, there's sufficient capital, and the teams that win over the next 5-10 years are deeply focused around execution. These will be tech companies with strong engineering cultures that are using bleeding edge technology within their products and services. And not just in the products and services, they're using that engineering across the organization in customer service, in marketing, even in finance, right? And they have a deep discipline of using data everywhere and empowering their organization through data. And as I mentioned before, they're assembling smaller teams with more exceptional, high performing people. And so we see this inflection point where, just being a first mover isn't going to make you a winner, in a market. You really have to be competitive. You have to build a world-class tech organization. And so Vietnam plays a really interesting role within the region. You know, you think about tech ecosystems, you need certain raw ingredients. Number one, you need a place where people want to live and work. You know, a favorable place, a place that's attractive. You need plenty of software engineers. You need
Yes.
sufficient engineers to be able to fuel your growth and be able to build your products and accumulate the data that you need. And finally, you need the capital. And I think the advantages that Vietnam has is it has a kind of those three pillars built in, you know, and it's by design. If you look at China and Indonesia, you know, those are very large populations. You know, Vietnam only has 100 million people.
Still
It
very
doesn't have,
sizable. Very
it's
sizable.
sizable, but it's not large enough that Vietnam needs to implement protectionist policies, right? It can't implement policies that only support the Vietnamese companies to succeed. In order to put Vietnam in the right trajectory within kind of the more regional or global economy, it needs to, by design, create an ecosystem that's accessible, that is favorable for foreign investors and stakeholders. Here's some examples. You know, the number one ride-hailing company in Vietnam is a Malaysian company, Grab. The number one e-commerce platform is Shopee, Singaporean. Number one social networks, Facebook. Number one, you know, browsers, Google, and so on and so forth. It knows it has to bring in these other players to be able to leverage the assets that Vietnam does have. And this is, you know, it's played well within the manufacturing and supply chain arena, and it's playing well with the tech arena. You know, startups here, you know, they don't get a handout. They have to compete with the Facebook. They have to compete with the Shopee, and that accessibility also drives a lot of diversity. You know, foreigners can find themselves in a market where they can build a thriving company, a market-leading company, you know, without being Vietnamese, right? And so that diversity competition ultimately, in the long run, creates high performance. And that's what we're seeing now. The teams over the last couple of years coming out of Vietnam are not just building solutions for kind of universal basic needs. You know, if you look at the opportunities in Vietnam and most of the markets in Southeast Asia, it's about consumers who have now, you know, a little bit more disposable income. They're moving from low income to middle income and what to do with those things. And a lot of it centers around healthcare, education, food, kind of these universal basic needs. And you have millions upon millions of small businesses who are getting on the internet for the first time in the last few years. And what can I do with that? I can understand my customers better. I can retain them better. I can serve them better. I can handle and run my business more efficiently and understand, you know, how to track margins in real time. So kind of these universal basic needs, right? In Vietnam, that's a majority of, I think, the value creation. However, there's probably a large portion, still a minority portion, where we think there's global innovation happening. You know, for example, we invested in a seed company here, local founder, building kind of the next generation distributed gaming platform. Now they're the number one NFT platform in the world. You know, when I talk to investors out there and they ask, where's this company? I say Vietnam. They're like, well, we had no idea, right? And yeah, it's this type of innovation that we're starting to see that I was expecting to see. And they're not just, you know, looking at universal basic needs, but hey, where can we be at the forefront of a movement or a tech paradigm?
So my last question is, what is next step and your long-term vision for the Ascent Vietnam Ventures?
Yeah, so when we set out to build this firm, you know, my goal is to build something that outlasts me. You know, this is my last job. You know, I want to build something that my kids can be proud of, something that is durable. So the goal here is to build an institution to be the best seed investor for companies that are starting out in Vietnam. You could be a local founder, you could be an international founder, you can be a founder in Singapore, starting an engineering team here. We have a sizable team here already, and we were going to double it by the end of the year to 16. And we want to be the best. We want to be the most preferred investor, the one that people can trust, that we are always there for them. For founders, founders who can seek always the truth in terms of advice and guidance, and one that can be viewed as a gateway to the rest of the world. We have an extensive network, not just regionally, but in Silicon Valley as well, and other parts of the world. And we can be that bridge to downstream capital that can take them all the way to IPO. So that's our dream. What's next for us is to continue to do what we're doing. I think there's increased competition in the market. We have 2 other firms that have launched here that have backing from sovereign wealth funds, and that's great for us. We like the fact that that this thesis is being validated, and that just helps us be better at what we're doing. And to continue to serve our investors well. They're looking to us as a great way to add a diversified and high-performing asset to their portfolio. And the investors that are on board, they're looking at us not for the short term, but the same way that we're building this firm for the long term.
Got you. Okay, thank you so much for taking time to introducing the fund investment platform, and I wish you all the best. Good luck with your vision.
David, really appreciate you having me on the show. Enjoyed it.
Thank you.
Thank you so much.
Thank you very much for listening to this episode. Don't forget to subscribe to the podcast, share with a friend, and drop me a review. Goodbye.